Should we buy or sell NanoString Technologies? So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So we have a very interesting theme that I call genetic engineering. We can see that it is substantially outperforming the S&P 500 from the low, but we are deep in their bear market territory at minus 65%. NanoString Technologies, they are in the general genomics business, 19% from the 52-week low, but a whopping 8% sell-off here on Friday. So definitively there's volatility in this space. So you might have to play with some wider stops and probably smaller positions, to counteract the wideness of the stop. Minus 79% from the 52-week highs. That is definitively a bear market. So this is the company's website. Discover spatial biology at any scale. Spatial multi-omics symposium. Yeah, very technical terms here. Catalyze the next revolution using spatial biology. The Genomics digital spatial profiler combines high-plex and high-throughput spatial analysis of RNA and protein expression data. It probably would be a good idea for NanoString to also, make a website that is easier to understand for investors, because this is very technical terms. So it's a bit heavy on those. Here you can see oncology, immunology, infectious disease, neuroscience, clinical. So they have a broad portfolio. Okay, so let's just look at the charts. So weekly data points, big picture. So the reason why this stock popped up on my radar is because we have fallen down to a multi-decade support level. Support. So going way back here to 2013, buying at this level usually works out. Yes, there have been times where this stock has gone even lower, but this is a level where we have more often been above it than below it. So it's an interesting level, at least for longer term positions. So how far are we from the ultimate, all-time low? Oh, that would be minus 50%, and that's way too wide to have as a stop, though. So we would expect the bulls to do something, and they shouldn't really allow us to fall below this, but that would be minus 14%. So one would expect these levels here from June and July to hold if there are bulls sitting out there waiting to put on some trade. Yeah, a very key resistance level here, great for the bears, is to short this blue 100-day moving average. It's basically been like printing money for the bears now for quite some time, and that's why they did it here as well. Early August, they put on short positions, and shorting that resistance level has so far led to 29-ish% gain for a bear, which is decent, pretty decent indeed. But I do think that having now fallen to a long-term support level, it's dangerous also to be a bear at such a level. Looking at RSI, we are at a level, we recently were at a level that has formed long-term lows. Looking at the daily data points, we recently were rejected here from the upper end of RSI, and that did create problems back here as well. So it was a level where we would expect something to happen from the more bearish side, and also here the 20-day PPO was also very stretched. So I write horizontal support here. This is not like a clean support level, it's a bit wide. But we saw the history. I mean, this stock usually trades above that level. So it's a level, hence, that is also dangerous for the bears. Yes, we could fall lower and break that horizontal support, that obviously would be good for the bears. But being a bear at a long-term support level is dangerous. So I do give the bulls a 4 here. Let's look at the seasonality. So here to the right, over the last 5 years in green, 7 years in blue, we usually see weakness into the last part of August, and then we do have some significant strength into early October. To the left here, over the last 5 years, yeah, September is 50-50, but on average, we usually see weakness October as well. Over the last 10 years, that is when it gets, you get a very different message. We see that September is one of the strongest months. On average, we have a 7% gain. October is usually very weak, but it means that September, it's not a great time to be a bear, especially at, a major support level. So it would make sense for bears to take some profits before September and maybe, shorting heading into October. The seasonality was a bit messy, but I do give the bulls a 5 here on the seasonality, given that September is usually a very, very strong month when we look at the most data we do have available. So here is SACS, number 3 hold here, F value score, but we do have C growth and C momentum. Industry rank is in the bottom 35%. No dividend, market cap 616 million US dollars. So there is some size here. Let's look at what the insiders are doing. Yeah, we haven't seen any transactions since April. We did have accumulation in April, so it was a bit bullish, but we don't have any recent action, frankly. So let's look at NSTG here to get that consensus estimate. And we do see that we have 6 analysts covering the stock. Average price target is 108% above us. Highest is 134% above us. And the biggest pessimist think there's a 59% upside. I think I will give the bulls a 5 here on the fundamentals. Very good price targets. And C growth score, it's good because when I looked at these genetic engineering companies, quite a few of them had like F growth score and stuff like that. So relatively speaking, NanoString Technology has a pretty good growth score. So let's look at relative performance. So we do have 37% positive with the S&P 500. We have 23% correlation with the XLV, which is the broad, healthcare ETF. 95% with ARC-G, which is, the ARC Genomics Revolution ETF. Then minus 89% with the dollar index. Short-term correlations, we have 85% positive with the S&P 500, 43% with healthcare ETF, 88% with ARC-G, Genomics, Revolution, and 92% negative with the dollar index. So, what happens with the ARC-G ETF? ARC-G is going to have the biggest effect on NanoString Technologies. So we do see here that ARC-G, let me just draw it in, it has recently emerged from a very major double bottom, and that's been a profitable double bottom. This week we did have a bit of an ugly candlestick here, a very much engulfing candlestick. Let's look at the daily data points. Yeah, so that blue 100-day moving average, so let me just draw it in. We are testing it now as a support level. It has been a resistance level in the past, so we definitively do want to see the bulls come in here to buy. The bulls also get some assistance here from the green 50-day moving average. So the bulls do have a bit of a setup that could work out. Let's look here at looking at RSI. We did pull back from a level that has been higher than some of the recent highs. Looking at the PPOs, we did see a stronger move than we have seen in quite some time. So the context of this pullback sort of is important. So having a pullback when you have seen a strong rally, that is more normal and not necessarily very bearish. But if, say, we were to have like this kind of a pullback without being, high on PPO and RSI, then that would be more bearish. Here is the relationship between NanoString Technologies and ArcG. It's a bit messy. We are emerging from a low end of this RSI range, so we usually see NanoString outperform ArcG more. So that's potentially a bit of a bullish future development. Let's look at the seasonality here. Yeah, so the seasonality is bullish here for NanoString leading into 15th of September. We don't have a lot of data, but the data we do have is rather interesting from a more bullish perspective. Here I am comparing the Genomics Revolution ETF against the healthcare ETF, the XLV. The chart is a bit messy. We are emerging from a very low level, so we usually see more outperformance from the Genomics Revolution ETF. Let's look here at the seasonality here, and we do see, usually Genomics underperform the healthcare ETF leading into mid-October. No, underperform. Okay, so underperform. Okay, so our Genomics Revolution usually underperform XLV into mid-October. The data we got here on relative performance was a bit messy, so I give the bulls a 1 here. We do end up with a 3.8 in favor of the bulls. The key line in the sand is horizontal support. But, as I said, it's a bit of a, cloudy support level. It's not like squeaky clean and tight like, say, the 50 daily moving average for Hoker or some other, clean level. So we have some time left. So let's look at some other stocks in the ArcG Genomics Revolution ETF. One of them is Exact Sciences. Interesting developments here with that stock as well. We have fallen down to a longer term support level. We had support back here, and here. So ever since back here in 2017, we have, for the overwhelming amount of time, been above this current level. So for many, many years, investors thought that there was value in Exact Sciences to the upside, so they bought. That doesn't mean that we can't break below this level. If we were to lose this level, that would definitively unleash a lot of selling. But currently I would give this one to the bulls, but that is completely contingent on them being able to muster enough support, because they definitively need this level to hold. Going here to the daily data points, we have a critical double bottom here. So it's very important for the bulls to buy ASAP. ArcG actually has Teladoc in this ETF. Last time I checked, Teladoc was more like a tech, in like a more communication services healthcare stock, but this is one of the reasons why you need to really look under the hood when it comes to ETFs. Having said that, this one is also interesting. It's at a very key support level. Support back here, support. Actually, even going way back here to the IPO price. So this is an interesting level for a long-term bullish position. Obviously, if this support were to go away and be broken, that would be very, very bad. So there's a lot of interesting developments in this theme. NanoString Technologies certainly got some interesting technicals, seasonality, and fundamentals. And when we looked at other, players in this theme, we saw some interesting developments as well. There are quite a few of them at major horizontal support. they have seen substantial repricing. So if there are people looking for value out there, at least from a longer term perspective, because you can't of course expect like a 9 PE for these kinds of stocks, but longer term, if there's a very substantial upside, a lot of growth, then even like a 20 or 30 PE could be value relatively speaking for certain themes. So yeah, there's that.